Globally, markets are spooked by rising inflation, Fed taper, the possibility of 4 rate hikes this year. In India as well, we've seen a sell-off accelerate for the fourth day in a row. Is this going to be a routine 10-12% kind of correction, which is termed as healthy? Or do you think this time it's something different and the correction could go deeper? What is your own gut telling you?
I think, if you see this year perspective, we have to keep our expectations pretty low. Last year, we had a situation of abundant liquidity, interest rates sort of going down. And that seems to be reversing. Now, only the pace of reversal, one does not know, and it will really depend on what kind of pace of reversal comes from the Fed side. And, this is given that you will see reversal, right? So as and when we get more data point, more clarity, market will be kind of, up and down. So I think this year one has to be very, very clear from the point of the markets will be volatile. There will be corrections along the way. Sectoral rotation will continue to happen. I think so from a headline index perspective, it may be very muted market throughout this calendar year. Maybe one should be happy if one gets a single digit return or maybe early teens kind of return. But sectoral rotation would happen, more shift will happen towards, sectors hedged for inflation, sectors for with where rising interest rate is not hurt or maybe benefits. Those kind of things that we are already seeing happening that. But, you will see a nature of the market will be very volatile this year, and one has to be cognizant of that fact. One has to keep the expectations low from market this year.
All right. Hi, Vikas. Good morning, and thanks for joining us. This is Pavitra. So, in this context where we do have so many cues coming in, whether it's from the global markets, all of this talk of taper for our own markets, we have the budget coming up, we have the earnings season. And as you mentioned, it's looking quite volatile so far. Are there any safe pockets here? Do you think that if you were to invest in this market, there are certain sectors which are perhaps more promising right now?
So yeah, sure. Depends on what you're looking for. So I wouldn't say safe sector. The markets are volatile. Everything will be volatile. But one has to keep in mind what can do well in this kind of environment. And I think clearly banking can definitely do pretty well. We've been saying for almost 6 months, and we think that banking this year could probably outperform the broader indices for the simple reason it tends to benefit from rising interest rate environment, and also we have a credit growth picking up. So, sector is coming out of a long side. So I think banking and financial services in general, but banking in particular would do well in this particular throughout this year, maybe, next year. Second sector, I think, which can do well would be real estate, according to us. Again, we are seeing job creation happening in the economy, demand picking up, and interest rates are still, even if, they're looking up, by and large, the 6.5% kind of, housing loan you get. So I think, demand would be robust and inventories are low. So that sector also does well in a slightly inflationary environment. So we think that will be pretty all right this year. Another sector which could be interesting could be IT sector. I know there have been recently a bit of a sort of correction in the sector given whatever is happening globally, but we don't think it's a cause of worry. It's a defensive sector with a huge cash flow. Demand environment is very robust. Also a kind of hedge against any kind of rupee depreciation. So I would say that's a defensive sector in the portfolio one should have. One should not get worried about short-term sort of movement which we have seen in the recent past. And lastly, I would say that capital goods environment also pretty looking strong because investment cycle has picked up after a long period, and we are seeing order book picking up. A little bit of worries around the commodity price hike in the recent past, but I'm sure that will be passed on with 1 or 2 quarters of lag. So I think these are the 3-4 sectors. And maybe lastly, I would say that manufacturing, a lot of action is happening. Fact that there's a big shift happening from China to India. This theme is likely to continue next 5-10 years, and this year in particular, you will see that acceleration keep happening. And given the fact that Chinese currency is appreciating and Indian currency is either depreciating or holding on, to that extent, it gives advantage to Indian manufacturer. So that theme will continue to play out throughout this year. So I think these are the 4 or 5 sectors one should remain invested. But again, I would repeat that keeping expectations low, and this year probably one can form the base from a next 3 to 5 year perspective.
Okay, so finance or financials, real estate, IT, capital goods and manufacturing. These are the sectors where you are still bullish over the longer term. Vikas, particularly about manufacturing, could you talk about a few stocks? Because manufacturing is such a wide sector. It encompasses across various sectors. So which would be the stocks which look interesting to you?
So, Prima, rather than talking stocks, let me give you some sub-segments within manufacturing which one could look at, which have a structural growth driver. So I think, if you look at, APIs, chemical space, again, have a very, very long structural driver. And I know in the recent past, some of the sort of segments of stocks have taken beating on that. And I would say take that as an opportunity to sort of build your exposure. This is a very, very, structural theme. What we have seen is only a tip of iceberg as far as the API and chemicals are concerned. Same way, we think that textiles are beginning to pick up. In textiles, dynamics of sectors have changed. Historically, it's been looked at a very volatile sector. I think with the shift taking in place, a lot of outsourcing will happen from India, and that will have a huge implication on the entire value chain. Likewise, you will see even in the auto component space, and also other components also, but broadly the component space, I would say huge opportunities are coming by. And again, this is structural in nature. There's a shift which is happening from China across all these sectors. So, and this shift is gradual and slow. And for the reason I highlighted to you that, currency is also right now helping in terms of accelerating that apart from other factors. You can look at that as well. Even I would say that, capital goods in some sense, are beneficiary of that. India is exporting reasonably good amount now. So in certain segments. So across some of these themes, one can kind of keep looking at ideas. There are many companies, in my opinion, will become 5x, 10x, or maybe bigger in this cycle as this opportunity unfolds in front of us.
All right, Vikas, we will leave it at that today. Thank you very much for joining us and taking us through your call in the market and some of these individual sectors that you like. It is time